Hi, I'm Evan Maindonald. Welcome to The Main Thing. Today I'll be interviewing Rod Turner, who's the owner of ITP Group. Rod, could you introduce yourself?
Yeah, hi Evan, thanks for having me on. So I own an investment and development company, and essentially in the past we've always mostly done developments and traded sites where we're building to sell, and in the past couple of years we've pivoted slightly to build to rent, and so it's just building on that portfolio and investments really.
Okay. So one of the things that I like to ask people is how they got started in property, because I find that journey that people go through from wherever they got started to whatever they're doing now a very interesting one. So just tell me how you got started in property,
It's
Rod?
probably very similar to many other people, was that I purchased, at the time it was a flat that shared a party wall with Wandsworth Prison, and it was built for the prison wardens when the prison was built, and it was pretty horrible and run down, and it was the only thing I could afford, and
Okay.
I saved up.
So in Wandsworth, obviously.
In Wandsworth, yeah. And I saved up for that and bought it, and I was always into buying a wreck and making it nice, because I think my mum had done that 20 years beforehand and said how stressful it was, and I thought, oh, what a great challenge, I'll give that a go. And so I bought this flat and turned it, I think it was a 1-bed, turned it into a 3-bed. I had my mates come round and bodge it all. It was the worst workmanship ever, and then rented out to two of my mates, and we stayed there, and everything broke, and but they paid for the mortgage, and we had a great time. And yeah.
So when was that?
So that was in 2006.
Okay.
So 2006, I did that, and then I got so fed up of everything breaking that I thought, okay, I'm just going to get rid of this place, and I'll look for a new place to live. And I found another property on Probate. Unfortunately, I was lucky enough to move my mortgage at the time, because if I had to go through getting a mortgage, because at that time I was self-employed, so I've always been self-employed. So my earnings weren't sharing as great, because I was trying to keep my tax down and all that sort of stuff. And I found this property at Probate, and basically did the same thing, but trying to do a better job, where we did an extension, converted something into a 2-bed, and I loved it, and I never thought I'd do anything with it apart from live there. And then I had an estate agent come round and see it, and said how much he thought I could get for it, and I just thought, wow, let's get rid of it and do this all again. That was easy. And
okay, so that sort of gave you the spark of the idea that you could build something out of this. But I just want to take you back a little bit, because I thought what you said about your first property was really interesting, and actually, in some ways, perhaps it was a gift that you actually lived in it rather than just tried to use it as an investment.
Oh, yeah.
Because actually you had the experience that was associated with
Cutting
everything
corners.
that you, exactly.
Yeah,
and I'm guessing that probably that stayed with you, that you just don't do that again.
That's with me right now. So
Yeah.
I often talk about capital outlay, and actually, if you're looking at a long-term investment, how important the capital outlay is at the beginning, which will, for your net costs, reduce massively over a 10-20 year term, which is really what I'm kind of trying to do with a lot of my investments. So it's absolutely stayed with me.
Yeah.
And then
interesting.
And then from there, started thinking, great, am I a property developer now? Yeah. And let's keep doing it and do it on a bigger scale and roll up everything into one. And then started my first kind of proper development just at the end of 2007. So it was terrible timing, really.
Okay. Oh, so you did this all very quickly, right?
Yeah,
so you
yeah.
bought that first flat in 2006.
So that was sold within just over a year, and the next one we did, and it was.
So the next one was the Probate.
Yeah, next one was Probate.
Where was that? Where in London was that?
That was in Tooting. So that was actually very close to where I live now, yeah.
And that was what, a house, a flat?
It was a flat, yeah.
Okay.
Yeah.
And again, similar sort of thing, refurbed it, but you did you, I mean...
I did extend it, so we did structural stuff to it, yeah.
And did you do a better job on that
Oh,
one?
much better, yeah. It's a lovely flat.
Right.
Yeah.
And you still have that one?
No, I don't.
No. So you said you sold it. Yes.
Yeah.
Yes.
So
Yes.
then started looking into a development. It couldn't have been worse
So
timing.
just to slow you down a little bit,
Yeah.
you took the lump of cash that you made out
Yeah.
of that second property,
Yeah.
and you effectively funded that development yourself. You put the equity.
Yeah.
Right.
That was my equity.
Okay. So what was that development?
So that was, we split a house into 2 flats.
Yeah.
And it was. It didn't go great because obviously we were looking at it to. I just wanted to build it, sell it, make a huge profit with as little effort as possible, as I had done the last one, and it definitely didn't come off as planned. Fortunately, there was still actually a pretty good appetite for what it was, which was 2 one-bed flats in that area. So I didn't lose a great deal of money, but I certainly didn't make much money on it.
It's interesting actually because I bought a small development site in London in 2009, developed it and sold it in 2010.
Yeah.
And really not a great development, I wouldn't say. It was okay. I guess it's better than it would have been if I bought it in 2007.
Yeah.
But it's interesting actually because you must have worked quite hard. If you bought that in 2007, because we obviously know what happened in 2008.
Yeah.
By the time you finished it, you must have actually worked quite hard to make that project actually, get to a point where it didn't lose you a lot of money.
Well, I think we were pretty fortunate in that no builders were in work, and so that was a good point. I mean, I've never built anything so cheap, even to this day probably. So that definitely worked with us. And again, I was sourcing all the own stuff. I was project managing everything.
Yeah, so you could keep the costs down.
Yeah, definitely kept the costs down.
Yeah.
And also we had the senior debt that we took on was fairly cheap, and we got that from a private individual.
Was that base? Oh, so okay, well, you got it from private individual.
Yeah.
So right, yeah. Okay.
So that actually worked. I was very fortunate with that because if I hadn't have done that, I imagine when we were trying to sell it did take a while. And we had gone through the traditional senior debt, we may well have gone through into penalty stages and things like that. So it was fortunate, and it was fortune from my naivety of not really knowing senior debt funders and things like that, and not being financially savvy with what I was doing, and just getting a good relationship with a friend of the family, really. But
that's interesting, and I would have thought, in retrospect, you would consider that to be quite fortunate, because I'm assuming that individual would have been a bit more understanding probably than a bank, and you could have a conversation with them.
A bank whose capital was
squeezed
and needed to pull money in from everywhere they could. Yeah, so definitely.
Yeah. Well, that's interesting. And so, when you went into we all went into the global financial crisis, but at that point in time, you didn't have much or any lending with banks.
No, absolutely not. I didn't have a clue what was going on. I was very naive in terms of what was happening. I actually had another business which I'd run all my adult life at the time, and which was a security business. So
and that's a business you'd started, is it?
That's a business I started. Okay. So and that kind of snowballed. I never thought that it was going to do well. But it did, and that kind of kept me alive through that, really.
Okay. So, I mean, so obviously then you had started that business before you started the property business.
Yeah.
So was it a deliberate move into property, or did you just start doing it?
It was very gradual. So the property was more of a hobby, but actually made better money. Okay. We made big, nice lumps of capital that got rolled into the next ones. And I was fortunate to have started this other business that was what I lived on. Yeah,
so actually it's interesting because that model where you have a regular flow of cash from a business.
Oh, it was vital.
But you also have something that's maybe a bit more lumpy. It allows one to carry the other through, and I think that's a model that can work really well. That kind of diversification of, particularly in property, of income streams.
100%, and that was definitely key for me.
Yeah.
And then.
So you got out of that probate deal when 2008, 2009?
probably a bit, yeah, towards the end of 2009, I think.
Yeah, because the market was almost non-existent for a period of time.
It took a while, and then it was, and then the next one was, because I was living in it at the time. So the next one was a property in Battersea,
right,
which was a great one. Again, bought it to live in. It's an auction site. My girlfriend at the time, who's now my wife, had just come over from the States to live there, and this property was bought. I mean, it had no back wall to a 3-story building.
Okay.
So it was
definitely a do-up then.
Yeah, it was a big do-up. So we extended that up and out, and I mean, I seem to like doing these types of buildings that are real sort of structural wrecks. I just get a lot of enjoyment out of that, and yeah, did that up, and it was a great house, yeah, and then kind of thinking, what are we going to do next? And it was actually at that point when I sold that house that I realised this is what I'm definitely going to do full time. Up until that point, it was more of a kind of part-time thing.
So what precipitated that decision? I mean, obviously you could.
I don't think it was so much the fact that I was enjoying property so much, which I actually was.
Yeah.
It was that I hated what I did in my other business, and even though it had been really good to me, it wasn't something I enjoyed. It was based around huge amounts of staff that were kind of low paid. It was very difficult to motivate people. And I quickly realised that I was a fairly terrible manager of people, which was not good when you're trying to manage a lot of people. So,
no.
I kind of fell into the property like most people do. But I really enjoyed the front end of getting the deal done, getting it for a good price, getting those moving parts together, and then the build. It was creating something nice out of something that started off not being very nice.
That process, I find also very satisfying.
Yeah.
You know, taking, I guess the way that I would put it is you take the worst building in the street and you turn it into the best building in the street.
Yeah.
Just being able to step back and say, I was responsible for that.
It's incredibly satisfying.
It is, and I didn't even know what you call that sense of satisfaction that you get out of it.
Well, it's also a sense of achievement, I think, as well, that you get.
I feel proud.
Yeah, absolutely, and I love it. And actually, for the last couple of years, I've been very focused on, in my business, and especially as it's more focusing on the investment side, but still with a lot of development.
Yeah.
I was focusing heavily on trying to kind of keep myself away and keep myself in a shareholder mentality rather than a managing director mentality, because the managing director mentality, you are in a high stress job. That's what a managing director is. Whereas a shareholder is more of a big picture player that comes into a monthly board meeting and helps steer that ship. Whereas that managing director might be, I don't know, on the floor of that ship, pulling the sails down and ordering everyone around. So, but what I've kind of realised from that is there's nothing wrong with being that managing director role as long as it's in a role that you enjoy. And because I enjoy the front end of the development, that's actually what I quite like doing.
It's interesting actually, because what you say about not liking managing people and maybe not being very good at it, actually, because I think you tend to be good at things that you like doing.
Yeah.
That's also probably true for me. And I think, although, you know, managing people in an environment where you're managing smart, highly skilled people is quite different to managing people in an environment where you're managing people who maybe aren't that well educated or and are relatively lowly paid.
Yeah.
It is much more difficult to do the latter, I think, and much more mentally challenging. And I think you need to be a certain kind of person to be able to do that. And I'm not that kind of person.
No, neither am I.
Yeah, but I think what's really interesting about property, and so, you know, I think we often fall into things that suit us, if you know what I mean.
Yeah.
So the point is, we didn't necessarily start out deciding we were going to do a thing, but we start doing it and we realise we like it because actually it fits us.
Every time I look at property, it gets better and better as a business. And it's things like I always said I never wanted staff again, which was a bit of a kind of tongue-in-cheek comment. But what I really meant was in sort of property businesses, you can have huge amounts of revenue coming in with very little staff input. And for me, as investments, it's all about the net result and the net income that you get and the net return on equity, for example, over a period of time. And what I find is I would much rather, if you've got sort of a £10 million portfolio, I'd much rather that £10 million is spread over maybe 5 to 10 assets rather than spread over 100 assets, because it reduces those ongoing costs of management, and with that will come voids, maintenance, things like that. So for me, that's very important kind of vision that I want my business to follow. Having said that, it's hard to get to that level acting in that way. So an easier way is to start by getting the smaller ones that give the higher yields and then rebalance every few years into the higher value ones. So again, I'd much rather £1 million of income coming from a 5% yielding asset than, £1.2 million of income coming from a 37% yielding assets. I mean, I've probably got the maths wrong there, but you kind of get the idea. It's the net result really at the end of the term that I'm focused on.
Yeah, and I think in a way what you're saying is maximum result for minimum effort, and I think actually.
But then with the effort, again, it goes back to what I enjoy. So if the effort that I get to put in is done at the front end stage, like we said, with the purchasing, with the getting the deal done, getting the development done, then great. But I don't want to be doing that on 100 small properties. I'd rather do it on 10 larger ones.
Yeah, no, absolutely. And I think that's one of the things that property allows you to do. It allows you to generate a significant amount of revenue or profit per person. So actually you can run a business that's maybe as big or bigger than a business that might employ 20 people in another industry, and you can do it on your own.
Absolutely. But it's the getting to that scale part that's hard. So it's understanding that actually to get there, sometimes it's easier to either put in more effort or take more risk, or to spread yourself out over a few more properties, and then, like I said, rebalance for the higher value but maybe smaller yield and less effort when it gets to that point.
Yeah, and that I think is quite interesting for people in property, because people have a tendency to do something, and if it works, they just do that thing again. But actually, what you're saying speaks to is that actually it's better in a way that you reinvent yourself. So at one point, it might be better to have 50 properties because you've built that up over a period of time. But in a way, what that philosophy says is actually maybe the best answer is clear all that out and start again and turn that into 5 properties.
Well, I think this is the beauty of property investment, is there is no right way. It's what works for you at that point of time. So, for example, if you've got a young single person with no kind of dependents who's got loads of time and energy, then absolutely they might be better suited to doing that. Whereas if you've got someone that's got a small nest egg coming close to retirement, then their kind of risk effort is going to be very different to that of the younger person in relation to the same reward that they can get for it. So I think it just depends on where you are in life, your personal circumstances, and what it is that you're trying to achieve in the end, really.
Yeah, no, it does. But I do think that if you're getting it right in property, then probably what you should have done is you should have built up from doing projects on a smaller scale. And okay, maybe you, if you like that, you just keep doing it. But if you want to build your business up, then you probably start doing larger scale projects. And I guess it strikes me that there's a point at which you actually say, okay, I've got to a platform. Do I actually just sort of throw away that stuff that I was doing, or try and move out of it and then move into a different...
I think there's 2 arguments here. I think that's one, but then playing devil's advocate, there's also another one of, if something's working, sweat it, like run your winners. And because, like we know in property, legislation comes out, things change, markets change. So there's certainly an argument for if something works, and sweat it, because it may not work forever. You often hear kind of probably people talking about great deals they did in 2014. I mean, half the stuff I did would not work now, because the market and various other things have changed.
Yeah. Well, no, it's true, and I think as you found out very quickly when you started, the market, a rising market will cover a lot of, a lot of, let's say, inexperience. I think there's
a fantastic buffer, which is I've always looked for areas that are going into a rising market, because I know all the mistakes that I can and could make, or that can be made, and it's, if you've got that rising market, it just gives you a buffer. It's a Brucey bonus, isn't it?
It is, but I mean, seeing those trends and seeing where those rising markets are is quite difficult to do.
Of course it is, yeah.
But I know that you spend a lot of time thinking about market trends and market data, and so I guess one thing I'm really interested in is the extent to which that knowledge or that research that you do, that understanding that you've developed in the market, has pointed you in the right direction. I mean, have you ever looked at market data, made a decision based on it, and actually
followed through?
No, but then actually got it wrong. Have you ever done that? I mean, I'm sure you've got it right a number of times. But.
Yeah, I'm sure I probably have, to be honest, but I don't think I've been doing it long enough to, and I'm sure I will. But at the moment, where I've really got into the data and getting very analytical has been probably from kind of 2014 onwards, and that's where I was predominantly working in London, and felt that actually the London market had reached a peak, and I was struggling to see where it could go, and started really delving into some of the fundamentals there, and that's what made a decision for me to start investing in Manchester, and not to invest there, but to not invest in London. And then there were other factors I looked at as to, where should I be investing? And
okay, so this is interesting. So your reaction to a concern about the direction the market was heading in, and a sort of a feeling that maybe you couldn't see. It was
a gut instinct, and it was kind of there was basic fundamentals, but that really made me go and have a look and get to the bottom of it. I enjoyed that. I enjoyed. I don't know, it's like a puzzle, isn't it? Looking at trying to work out that answer.
But it's interesting because, and maybe this is a lesson that I need to learn, and I think it's probably a lesson that a lot of people need to learn. When you start a business, what you tend to do is you tend to do stuff and then you keep going. I think it's that process, and quite often because you're doing it all the time, you don't see the wood for the trees. So it's hard to draw back and actually see what the bigger picture is that's going on around you. And that process of actually just sitting back and saying, okay, I'm, rather than just jump in and do stuff, what I'm going to do is I'm going to do some research, as you might when you start a business, and actually just understand where I think we're at in the cycle and where I think the real opportunities are. Again, you refresh.
I think the benefit from property, and in that regard, was that when you're buying, developing, selling properties, it all takes time. So you've got a bit of time to go, okay, I remember we were doing a development in Pimlico, and one unit sold, another unit didn't, and it was that lag time that the second one, or it was actually the fifth one, took to sell, that really got me panicking, and it was then that I kind of got into looking.
So you thought, okay, the market's telling me something here.
Yeah.
I need to really understand this.
Yeah, exactly. Yeah.
That's very interesting. And when was that?
So that was
2014, was it? Or no?
Well, no, we started that in 2014, sold it in 2015, and it was from 2015 to kind of, 2018, I didn't buy anything in London.
Yeah, but that's so that's sort of slowdown in sales. That was 2015ish, was it?
Yeah, yeah. And then when I look back at it, it was obvious it was stamp duty that was causing that, and a few other factors too.
Yeah. So because you were in the market, you saw that slowdown coming probably before other people realised it was on its way.
I think even I was too early. So I probably could have stayed in London for maybe another possibly year and done okay. But I panicked and then started really looking into things. And I still wanted to buy in London, but the price I was willing to pay for sites was nowhere near what they were going for. And so I was getting really frustrated and not being able to do it because I was looking at the fundamentals that I like to look at. And so that prompted me to start looking elsewhere, and that I chose Manchester for the job creation, wage growth. I was looking at how much money the government was spending there. I started looking at how much money a government putting into infrastructure makes a difference to other things, and saw that it was kind of 800 million plus seems to make a big difference in decent cities, or $1 billion plus in London. So it was little things like that I kind of got to realise, and then you can go and see, right, where's the government putting money into over the next 5 years, and then it's, well, do I understand what that is or don't I? And I understood the concept of Salford Quays and Media City and things like that, and chose that and started dipping my toe in there, and it worked out okay. And then started looking back in London as well, because I started to see some things come up that I feel, again, I think I did buy a site late last year.
Yeah.
And again, I think I was a bit early on that as well. I think if I bought it now, I'd probably got a better price, but it's in the long term, it will be okay.
Maybe not. Maybe somebody else would have bought it.
Yeah.
And actually, if you make a profit out of it, it
I
doesn't
mean,
really matter,
that's to hold long term as well. So that which is why I felt, okay, now it's a good time to get in on that.
Yeah.
But yeah.
No, it's interesting. I think patience is a really important trait to have in business, and I think people tend to feel like they have to be doing something, but sometimes I think there are times when it's better to do nothing than something.
Yeah, absolutely.
And
especially in investment business.
Yes, I agree.
There's a time in the market to sit on your hands, isn't
there? There is, but I think in property in general, it's a long-term business, and the point about that is that once you get into something, it's quite hard to get out of it. And so if you buy something and you find that you're in a position where you have no option but to sit on it, then you can't really do anything else because all your capital's tied up in it.
Definitely.
And so in those situations, if you've done something like that, you look back in retrospect, you think actually it would have been better to do nothing and just wait.
Absolutely, and it's your opportunity cost versus actually what happens. That's why your sensitivity analysis and your multiple exits are so key, aren't they?
Yeah, I agree, and I do think just giving into that emotion, I need to be in the market, is absolutely the wrong thing to do.
But it's so difficult as well.
It is,
I was getting so
difficult.
Frustrated, and it's like buses. Suddenly they all come at once, and it's the ones that work. But I remember speaking to someone going, I've been looking for it. It was about 8-9 months, and I was looking at sites, analysing hundreds of sites, and just I can make nothing work on it, nothing for what I needed. I was getting so annoyed, but yeah, definitely, I'm glad I didn't.
I strongly believe that great fortunes are made in recessions. I mean, people who bought property at the depth, who had the cash to buy property at the depths of the global financial crisis, made a lot of money. And the difficulty is picking the bottom of the market. That's the thing. Have you got in too early or not?
I think it's almost safe to wait for it to start rising.
But by then maybe you're going to overpay.
Well, absolutely. So it's a really tricky question.
It is. It's tricky, and you come across the same thing with the stock market. People say buy low, sell high, but how do you know what low is? How do you know what high is?
Of course you do.
And I think to some extent it's the same with
I think
property.
there's certain metrics you can look at to see how it works. But I think it's $1 million question, isn't it?
It's always at best an educated guess. I think.
Definitely.
Good.
Yeah.
Well, listen, Rod, it's been a real pleasure talking to you. Thank you for coming on the show.
Me. Yeah, it's been great.
I've learned a lot from this conversation and I've really enjoyed it. So, thank you, and we'll see you again soon.
Thanks a lot. Cheers.
Great.